welcome to another edition of BCR Webcasting. Today, I'm very happy to be joined by Kareem Abdel-Rahman. Kareem is Head of Global Transaction Banking at QNB Egypt, and will be speaking at our MENA Supply Chain Finance Conference, which will take place in Dubai at the Dubai Chamber on the 3rd and 4th of November. And Kareem will be talking on a panel about sustainable finance and turning the vision of sustainable finance into action. Kareem, welcome.
Hi, Michael.
Kareem, we're very much looking forward to the panel in November, and this webcast is just to give our audience a flavor of the importance of that topic and what you and your fellow panelists will be talking about on the day. So how do you think, Kareem, banks in the MENA region and Egypt can integrate sustainability into international transaction banking and trade finance solutions?
Okay, thank you, Michael, for this opportunity. When we talk about integrating sustainability into global transaction banking and trade finance in our region and in Egypt especially, it is not just a nice to have in the time being anymore. It is becoming a business necessity. For banks, it starts with designing green trade finance solution. For example, giving better terms for companies importing renewable energy equipment or exporters of sustainable agricultural products. Noting that in Egypt, the government plans to expand and develop renewable energy to reach 42% of the installed capacity from renewable energy sources by 2030. That is investment plans for the Ministry of Electricity and Renewable Energy for the current fiscal year, including directing public investment of approximately 100 billion Egyptian pounds to implement 48 projects, which demonstrate Egypt's commitment to accelerate the transition to clean energy and increasing the use of renewable source to reduce dependency on unsustainable energy. The second part is embedding ESG thinking into credit decisions. So when a bank evaluates a transaction, we ask, does it reduce emissions? Does it create inclusive jobs? If yes, it should get priority support. And the third is about partnership. When local banks work with institutions like the IFC or EBRD, we can bring in international expertise, soft loans, and global best practice into our local markets. So sustainable finance is not just good for planet, it's good for competitiveness. For Egypt, over 60% of our exporters go to regions where ESG compliance is quickly becoming a ticket of trade. And 25% of Egyptian exports in 2024 were to European Union countries. So if we don't adapt now, we risk losing access to those markets. If we actually create an edge for our exporters and our economy, if we do.
Yeah, so clearly this is really an increasingly big part of banks within international transaction banking and trade finance, and obviously critical for the future of banks in this space to take all this on board and integrate it into their functions and into their systems. But what do you think are the main challenges that corporates and SMEs will face when aligning their cross-border trade and ESG standards, and what can banks do to help them to achieve that?
If we'll talk about challenges, one of the biggest challenges for corporate and SMEs in MENA is awareness and understanding. Many business owners still see ESG as a compliance burden rather than a value driver. That are not always clear on what global buyers are asking for or how to document it. The second challenge is cost. upgrading operations to meet ESG standards, whether it's cleaner production, energy efficiency machinery, or transferable supply chain, can require significant investment, which SMEs often can't finance on their own. And the third is data transparency. International buyers increasingly want proof from carbon footprint to labor practice. Collecting and checking this information in a fragmented supply chain can be very challenging, especially for small exporters. That's where banks can a really enabling rule by first by offering sustainable finance products with incentives, lower rates, or long tenures for ESG aligning project. Second, by connecting SMEs to advisory service and partners who can help them to meet international standards. And third, by digitizing trade finance process so documentation and reporting become easier and more transparent. If we get this right, we not only help our clients stay in global supply chain, we also make them more competitive in a world where ESG is becoming part of the entire entry ticket to trade. That's a huge win for our region.
So there's a financial incentive for your clients, corporates and SMEs, to integrate and adopt ESG practices, and you're going to be as supportive as you can for corporates, and particularly for SMEs that will struggle
Sure.
to find the money to do this. But you're confident that with your help, with the bank's help, that they'll be able to achieve this.
Sure, sure.
And what part do you think new technologies can play in this? Things like digitization and blockchain. How can they improve transparency and efficiency in financing sustainable trade and infrastructure projects in the region?
Yes, the hot topic. Honestly, technology is the game changer here. In sustainable trade, two things matter most, trust and speed. And that's exactly where digitization and the blockchain can shine. Let's take digitalization first. When we move trade finance process from paper to digital, from traditional letter of credit and traditional bill of lading to the smart contract and e-bill of lading, we cut processing time from days to hours. That's not just efficiency. It is also reduce cost and the carbon footprint of moving document around. Now, blockchain adds another layer, transparency. Imagine a shipment of solar panels from Germany to Egypt. With blockchain, every step, manufacturing, shipping, customs clearance, is recorded in a tamper-proof digital ledger. That means everyone in the chain, from the exporters to the bank to the end buyer, can verify the product origin and the ESG credential instantly. For sustainable infrastructure projects like renewable energy plants or green transport system, these technologies can track how funds are used, ensuring they go exactly where they should. That's give both investors and regulators greater confidence, which in turn attract more capital into the region.
And in terms of time scale, what do you think? What is the time frame, do you think, for adopting these new technologies in the coming years or months even?
The time it depends on the readiness of each region. In Egypt, we take a good step and a very good step in the digitalization in our process between banks and customs and importers and soon with exporters also. So if we talk about Egypt, in Egypt we are ready to implement this strategy. And I guess during 1 or 2 years, we will see it in Egypt.
And what do you think regional banks and investors can do to channel more capital towards sustainable trade flows and green projects in Egypt and across the MENA region?
Look, if we want to see growth in sustainable trade and green projects, banks and investors in our region need to move from talking to doing. And there are a few clear practice steps to make that happen. First, set clear sustainable criteria for financing. For example, bank could have a green financing framework that prioritizes projects in renewable energy, water efficiency, or sustainability agriculture. That way, clients know exactly what qualified or how to apply. Second, create blended finance structures in partnership with development banks. This allows private capital to flow into projects that might otherwise be seen as too risky. In Egypt, we have already seen the IFC and EBRD co-financing renewable projects successfully. This model can be scaled. Third, build sector-specific expertise inside each bank. As sustainability trade is in solar energy, for example, has very difficult need for sustainable agriculture. Having teams that understand these key details help us assess project faster with more confidence. And finally, promote investors' confidence through transparency. Regularly reporting on the impact of financing projects, tons of CO2s saved, jobs created, energy generated, turn sustainability from buzzwords into measurable results. The beauty of this approach is that it's not charity, it's a smart business. The global pool of ESG focused capital is now worth over 30 trillion USD. You can check it from Global Sustainability Investment Alliance. This is the source. And Egypt and MENA region have the projects and potential to attract a meaningful share of it. So we are ready.
So yeah, that brings us nicely in full circle back to the title of the panel about turning the vision into action, which is really what you were just saying. Kareem, thank you very much for your time today, and we'll very much look forward to hearing more from you and your fellow panelists about this really exciting and interesting topic, which should, make some very considerable changes to the way transaction banking and trade finance is being done in the region. So it's exciting stuff. And just to remind everyone, Kareem will be speaking at our 4th annual MENA Supply Chain Finance Conference, which will take place in Dubai on the 3rd and 4th of November. And you can get more information about that at the BCR Publishing website. Thank you. Thank you, Kareem.
Thank you, Mike.